Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM with your top 3 market points of the week. This week, we're talking more macroeconomic front, so let's just dive right in. At point number 3, it was mortgage bonds rallying. Now, mortgage bonds are rallying right now because the administration came out and announced that they plan to direct roughly $200 billion worth of purchases of mortgage bonds towards Fannie Mae and Freddie Mac. Now, the intention behind this is to help address affordability concerns in the housing market, while also putting pressure on long-term borrowing rates. Now, the secondary impact of this is also going to put pressure on the Federal Reserve to keep rates lower on their end as well. However, the intricate details of how this purchase plan is going to be taking place have yet to emerge, so we'll keep you posted there. At point number 2 was Venezuela. For those of you that did not hear, the United States ousted former President Nicolas Maduro out of his presidency in Venezuela. Now, as of this moment, President Trump has come out and announced that the United States is pretty much going to be running the country of Venezuela in the interim period until a clear, handoff of power can take place. But he also mentioned that they would be roughly controlling their entire oil market indefinitely. Now, this is huge for the United States and just the world in general because Venezuela sits on one of the largest heavy sour crude deposits on the planet. Now, the big issue with that, though, is Venezuela lacks the updated infrastructure to really pull that oil out of the ground, which presents the opportunity for United States oil major companies to go in and help modernize that infrastructure, which is exactly what the administration is hoping for. They have really advocated for United States oil and energy companies to go in there and invest heavily in Venezuela in order to be able to access those oil deposits that Venezuela is currently sitting on. Now, right now, what that looks like is very much up in the air because we've had former oil companies like Exxon and ConocoPhillips formerly operating in Venezuela until their assets got nationalized under Maduro's predecessor, Hugo Chavez. Now, right now, the only major oil company that is still operating in Venezuela is Chevron. So right now, some oil majors are very hesitant to go back in there unless they have some guarantees, both financially on what those obligations look like to invest that type of money over the next decade. So right now, huge boon for energy companies, as you've been seeing in the market this week. And then finally, point number 1, it's non-farm payrolls in the labor market. So we saw non-farm payrolls come in slightly below the forecast at roughly adding 50,000 jobs this past month. In addition to that, the unemployment rate fell to 4.4%. Now, this continues to kind of reiterate that the labor market is in this slow to hire, slow to fire phase, and that doesn't really give the Federal Reserve much to go off of or change their plan going forward, because right now the labor market does seem to be stabilizing and it's not inherently weak, so it doesn't really lend for the Federal Reserve to want to cut rates to come in and save it and provide a boost. Now, however, those are your top 3 points this week. Next week, this could change things because we're going to be watching CPI data and inflation numbers come in. And like I always like to say, those are the 2 key things that the Fed really likes to look at. It's inflation data and it's the labor market. So if we happen to see a reacceleration of inflation, well, right then you could see potentially rates staying higher for longer. But on the flip side of that coin, if we continue to see further moderation in inflation, there might lend some credence to further rate cuts. Right now, we're seeing the futures market pricing in a no change on rates in the January meeting. So as always, when this data continues to flow in, we'll update you on this video. And that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor or dig into the written weekend review. And if you do not have a financial advisor and you want to get connected with one, please just follow our link below. But as always, please go out, enjoy your weekend, and we will see you the same time next week. Thanks again.